Yes, ma'am.
Yes, ma'am.
If you remember, so far in our last class, we already have discussed regarding annuities and annuities basically, and I explained what is perpetuity. Let me go through again a little bit. So if there any confusion, it can be clear. Okay. Before that, what I want to do actually, let me do that first for all of you. Whatever so far we discussed, let me show you that a little bit so that you can remember so far what we discussed. Let me open previous slides, then I'll show you. Okay. So very quickly, let's go through what so far we have covered so that you can remember it very easily, and it will help you to study on concepts. So this is the first topic we have discussed so far, what is finance, and then the four basic areas of finance. Those are managerial finance, investment, financial institution, international finance. Then we have discussed those all of those four areas quite elaborately. Ownership structure of a corporation, and we have discussed form of business organization. Those form are sole proprietorship, partnership, corporation. So far then then we have discussed goal of financial management. Those are, that is the goal. I believe you already understand that the goal should be maximize the market value of the existing owner. Then we have discussed the primary function of financial manager, and when the question is that what is the three main function that actually need to play by financial manager. Those are investment decision, financing decision, dividend decision, and we have discussed this again and again. I believe there will be there will be no confusion regarding this topic. If there is any, you can let me know. And we have discussed so far agency problem, agency cost, and I try to explain it in a very simpler way so that you understand the concept. Still, if there is any confusion, please let me know so that there will be no confusion during your quiz or midterm, because I will not help you there. And another thing, now we are talking about quiz and midterm. Please make sure that I will not take any makeup for quiz or midterm. Okay, so make sure that you'll attend. Otherwise, you know what will be the consequence. You'll not get the marks, and then is if, for example, if you miss a midterm, then you already lost 20 marks. So there is no point to continue this course anyway because you will have a very low grade. So make sure that you'll attend, okay? As because I will not take any makeup for that. And then we have discussed so far business ethics, and you actually explain what is ethics and how we can relate ethics with business as well. And then I explained that business ethics is not only from the good from the ethical perspective, as well as there is a positive correlation between business ethics and long term profitability. I believe you remember how we can relate these two. After that, we have discussed corporate finance so far, stakeholder, and then of course, still we're doing time value of money, future value, present value, timeline of cash flow, all of that. We have practiced several mathematical questions. So that's all the topics so far I have covered. Today we'll see the annuities, and then I will start another chapter, financial market and institution. And one topic I would like to discuss in our next class, which is loan amortization. It is not very hard, very easy, but today I want you to practice another mathematical question from time value of money. That's why I don't want to discuss loan amortization today. I'll directly go to financial market. So next, in our next class, we'll not have any mathematical question except loan amortization. So it will be easy for you to understand that part. Okay. Now you tell me, do you have any question until so far what we have discussed? Okay, thank you. So I just want to show you another thing. Let me show you that. Then we can move forward. Yes. Increase is it can be MCQ, true, false, fill in the blanks. Okay, so objective question. Okay, everyone, just give me one moment. I want to open a table for all of you. I want to show you that. So give me just 2 minutes to do that. Can you see the slides?
Yes, ma'am.
Yes, ma'am. During our class, I showed you this table. I didn't explain it much, I know, but I showed this table once. Actually, so far in our mathematical question, we calculate the interest rate, right? If the investment, for example, if $100 I'm investing today for 5 years, then after that, how much will be the interest? How much will be the total amount that I will get? So far, we have calculated with using our calculator. There is another way that you can find it answer very easily. You don't need to do the calculation for interest rate with actually a table. Okay, but I didn't show you this table because if initially I showed you this table, then maybe you just do this and you never learned how you can calculate interest rate. So can you see the table, the PDF file?
Yes, ma'am.
Yes, ma'am.
So here, what you can do, for example, if you want to know, just you take your calculator first and then calculate this with me. If you want to know what will be the interest rate if I if the interest rate is 10% and the investment for 1 year, how much will be the interest rate? Please calculate with your calculator and let me know. Rate is 10% and n equal 1. Is it too hard? Isn't it 1.10?
Yes, ma'am.
Everyone, can you please a little bit focus? 1.10, right? So if it's for 2 years, how much it will be? Just put in your calculator 1.10 to the power 2. How much you find?
Ma'am, 1.21.
Okay. Then
1.21, ma'am.
if it's for eight years, how much the amount will be? So for 8 years, 2.14, right? So what you did the calculation, correct? You take the calculator and you calculate that amount. But with this table you don't need to calculate. If you have this table, for example, someone asks you, could you please calculate the maybe he is depositing some amount and he will get uh, of course, when he deposited 100 taka or 1000 taka, after a certain period of time he's expecting some amount. If he just simply ask you, can you please calculate how much I will get interest after this period, or what the amount will be for me, you don't need to do all the calculation. What you need to do, if you know the deposit amount or if you know the current investment, for example it's 10,000, okay, or very simpler way, for example it's 100 taka. 100 taka investing for 15 years and the investment rate is 11%. What will be the amount? Can you please calculate that? If let me correct it again. If n is 15 years, investment rate is 11%, and the investment amount today is 100 taka, what will be the amount after 15 years? I'm not talking about the interest only, dear. I'm talking about the whole amount. Can you
Ma'am,
calculate it?
478.45.
478.45, right? Or 46?
46, ma'am. Yeah.
Okay. Now, if you can see the table, what we did actually, we using our calculator, first we calculate the interest rate and then we multiply this with the present value. But from here, if you have this table, how you can calculate this? Can you see here 11%?
Yes, ma'am.
In the
Yes.
top, and in the left side you can see n equal 15 years here, okay, 14 15, and go here and you can see 4.7846. Can you see that?
Yes, ma'am.
Now just multiply this with 100, then the amount will become 478.46. Am I correct?
Yes, ma'am.
Yes, ma'am.
So, what actually this table representing to you, that you don't need to calculate the interest rate by yourself. The table can help you if you understand the table and if you have the table basically. But for your course, I mean 101, we don't recommend you to use this table. You can download this table from internet. It's really very available, but I don't recommend you to use this. I just want to show you because now you're taking a fin course. So so these basic things that you know, because people will assume that you know those basic things. So if they ask you, do you know about the factor table, can you please do the calculation, if you say them that I don't know, then it will be quite, quite how should I say, it will be quite ashamed. So it's better to know all the option, but my recommendation is please, don't use this when you'll take major in fin or maybe some other course next semester, or um, because this is very initial. 101 is very initial and very easy. When you take some more hard codes, then you can use this to solve mathematical question. But it's up to you, because I show you this, I cannot deprive you to from using this. So if you want, you can, but I am not recommending it right now. But do you understand that? So how you can use this table for calculating future value, CVF, you need to check here, CVF. Okay, because when we are calculating future value, we know we are doing compounding. So CVF you need to follow, but and this is for annuity, future value annuity. You can find here A. And if you want to find the present value, I mean you are calculating the present value and you want to know the interest rate, discounting interest rate, then PVF. From here you need to find that. It's very easy. In the left hand side you can find the number of periods that is in here, number of periods, and the top here, these are the interest rate, R or I, and the left side here N or T. Okay, so it's very easy to find. Nothing complicated here, very easy to find, but you just need to understand that from here first you need to find how much how much period they're talking about, how many period they're talking about. If they're talking about 5, okay, and for example your question for example your question says 6% interest rate and 5 years, you want to know the discount rate, then you directly go here, 5 years and 6% interest rate. Okay, like this. And for PVAF, another one, this is for present value annuity. So if the question about finding present value annuity, then you can find the rate from here. That's the thing that you need to know if you want to use this label. Then you don't need to calculate all the, you don't need to calculate the interest rate from your calculator. Do you understand this table so far?
Yes, ma'am.
Yes, ma'am.
Have you seen this table before?
No, ma'am.
Okay, so far we have done this example regarding annuity, and I believe we practiced this question as well, future value for annuity. And before moving further, can you please tell me again what is annuity? Do you remember that?
Ma'am,
Anyone?
monthly installment.
Actually, dear, we call it equal amount of installment.
For a certain period.
Yeah, for a
We have
certain
to pay.
period. So if it's monthly installment but not equal amount, then it's not annuity. You understand?
Yes, ma'am.
So previous class I told you that just one moment please. Okay, sorry. Previous class, I told you about two types of annuity. One is ordinary annuity. So far, what we have practiced regarding the future value of annuities and present value of annuities. Another is annuity due. What is the difference between these two? If the first payment occurs at the end of the period, then it is called ordinary annuity. And if the first payment occurs at the beginning of the period, it is called annuity due. So when you'll have the question, because there is a little bit difference regarding the formula as well, about ordinary annuity and annuity due. So when you have this question, like how you can understand that whether you get ordinary annuity question or annuity due question. So it's a very easy. Let me show you very quickly. If it's a annuity due question, then you always, the question will mention the first payment is made today. Okay, or that, because the definition itself is when the payment is made at the beginning of the period, then it's annuity due. So if you have any question regarding annuity due, then you'll have your clue. So don't be so confused. Okay, so the formula is like we already done for annuities, I mean ordinary annuities. Future value and present value formula I have showed you so far. These are the formula for present value and future value. There is a little bit different between ordinary annuity and annuity due formula. When it's annuity due question, you just need, here the formula is 1 plus R, here you need to add. Okay, so the question here, you are saving for a new house and you put $10,000 per year in an account paying 8%. The first payment is made today. How much will you have at the end of 3 years? Okay, so if we, of course, if we know the formula, we can easily calculate this. The main thing is we need to identify what formula we need to use, whether we'll use annuity formula or ordinary annuity formula. So you need to understand that with this clue, whether they are mentioning anything regarding the first payment. Okay. So perpetuity, can you please tell me what is perpetuity? Anyone? Sadek, can you hear me? Thank you so much, Hasibul. Yes, absolutely correct.
Ma'am, this is the thing that we installment, we give installment for our lifelong. That
So there will be no ending period, right?
Yes, ma'am.
Okay. So an annuity in which the cash flow continue forever, no ending period. So this is annuity, and this is the formula for annuity. Payment divided R. Let quickly do a example of perpetuity question. Then it will be easy for you to remember or understand. Okay. So if the question is this, Dow Financial is trying to sell you an investment policy that will pay you and yours $35,000 per year forever. If the required return on this investment is 7%, how much will you pay for the policy? So here your clue for perpetuity is mentioning forever. Okay. So the formula is very easy. Payment divided R means C is payment and divided R is the rate of interest, right? Rate of return. So if this is the formula, can you please quickly calculate and share the answer with me?
5,000.
Thank you so much, dear. So 5,000. Molly, did you say that?
No, not me.
Okay.
Ma'am, it's a 5.
So if the payment amount is $35,000 and the required rate is 7%, Then what will be the answer? Please you calculate and then try to match with my answer. If there is any mistake with my calculation, I
Ma'am,
need to learn
5
something.
lakh, ma'am.
Ma'am, 5 lakh.
So 500,000. Someone missed 100 between. And just can you please give me one moment? I mean, I got a really important email. Okay, just one moment, please. Okay, I'm back. So it's clear, right? It's a very easy, but you need to pick up the clue first. If the question is give you the clue like forever or infinite time, then it's about perpetuity. And the most easiest formula that you can find about time value of money, that is the perpetuity formula. It's a very easy. You just need to know the payment and the interest rate. Then the answer is $500,000. Okay, now we'll do a very interesting, actually, we'll solve a very interesting question. This question from your book. Can you please go to page number 168 or 168? There is a problem, that is problem 4.13. You can find. So please open your book and then check that whether you find this problem the same page or not. And let me know. Tashfia, dear, can you please tell me whether you find it or not? Everyone, can you hear me?
Yes, ma'am, get it.
Yes, ma'am.
Okay, so did you find it?
Yes, ma'am.
Yes, ma'am.
Okay, so it's problem number 4.13. So far, regarding your time, regarding time value of money question, so far what we have covered that we did yearly. I mean, when the period is yearly, we have solved those questions. But for example, if the question is like that, find the amount to which $500 will grow in 5 years under each of the following condition. Previously, what we did, it's always we did annually. If the question about compounding annually or compounded annually, then we solved that before. But what happened if the question about compounded semi-annually, quarterly, monthly, daily, what happened then? Here you can see annually, semi-annually, quarterly, and monthly. So let's try to solve that, so that if you have any question like this, you'll not be confused. Okay, so what is the question again? You need to find the value, which $500. You need to find the future value. I mean, if $500 is the present value, how the amount to which $500 will grow in 5 years under each of the following condition. If the interest rate is 12% and if number of period is 5 years and the interest rate is compounded annually, then what will be the amount? You can answer that, I know. So do the calculation and let me know. Annually is yearly. We have already done that. If you did your, sorry, if you did your calculation, please unmute yourself and tell me what is the amount. Yes, for A. Okay, about the rest of my student? Do you agree or have you calculated? If this calculation confused you, then please try to calculate what will you get if the interest rate is 12% and if the present value is 100 and for 5 years. 100 is present value, interest rate is 12% and the investment for 5 years. Please do the calculation and share the answer in the chat box. Nitisha, thank you for solving this question. If any of you cannot understand this question, then try to solve what I give you now. If the PV is 100, interest rate is 12, and the number of period is 5. Okay, thank you everyone. So I believe you understand then why it's so difficult to calculate for 500. The rules are same. 500 is the present value, 12% is the interest rate, and number of period is 5 years. Thank you, Shahid. Eka, thank you. Sadiq, thank you. You need to think fast when you have MCQ question, and if there is mathematic question for MCQ, of course I'll not give you the difficult math for MCQ, of course not. But this is a very simple one that you, if you don't understand the concept or the calculation, then whatever I give you, you cannot answer, right? So you need to practice. Thank you, Nitisha. So let me show you the semi-annual, how we can calculate or how we can find the answer if the interest rate compounded semi-annually. Let me show you that. Then you will do quarterly and monthly for me, okay? Okay, first of all, can you tell me if we are talking about semi-annual means in a year, what actually semi-annual means? Can you tell me?
Two times.
Yes, 2 times. Thank you. So yeah, if it's quarterly,
Ma'am,
Fourth
three
time.
times in a year.
yeah.
Ma'am,
And
4 times.
Four times in a year.
monthly when it's a 12. So it's yearly, you can already calculate. There will be no different. It's annually or yearly, whatever we say. But when it's semi-annually, quarterly, monthly, daily, then the calculation will be a little bit different, but not difficult, of course. So for example, it's a 6-month period, I mean semi-annually. So 2 times 4, then I mean within 5 years, total number of period will become 10. Okay, not on 5, 10, because the question is about semi-annual. So when the question is semi-annual, that means 12% annual rates also need to divide it by 2, right? Because that 12% for annual. So if we divided the 12% to make it semi-annual, then how we can do that? 12% divided by 2. So 6%, 6%, total 12% for 1 year, but 6% for, semi-annual. 6%, 6%. So interest rate will become 6%, number of period will become 10, and the rest the same. PP is 500, interest rate is 6%, number of period is 10. So is it very hard to calculate? No. If then please try to calculate the answer for quarterly and then monthly. You just need to remember two things. What will be the N if it's not annually, and what will be the interest rate? Total annual interest rate you have, what will be the number of period, considering that you need to find out the interest rate. So if it's semi-annual, I have already shown you it's 6%. If it's quarter, try to find out that, what will be the interest rate and what will be the number of periods, then do the calculation. Please do it and share your answer with me. Nitisha, can you hear me, dear?
Yes, ma'am.
Nitisha, can you share what's the issue? I can see that for yearly, you also got a little bit different answer. May I know why? And for semi-annually as well. May I know why, dear? Nitisha, am I audible?
Yes, ma'am. I'll recheck my.
You can just tell me, dear, what's the issue? I just want to know so that maybe you can correct yourself, and there will not be any mistake that you do during your exam. That's why I'm asking. But you shared your answer. I really appreciate that, and it makes me happy that you try and share your answer. What you can do there, do the calculation again. If you get the answer that your other friend have got, then it's fine. If you get the same answer like before, let me know so that I can try to help you to correct it. Okay.
Okay, ma'am.
Okay, thank you. Everyone, please do the calculation for quarterly and share your answer with me. Then after that, after checking whether you get the correct answer or not, we'll move to calculate monthly. Thank you, Sadiq, Sadia, thank you. Those who have already calculated the value for quarterly, please do the calculation for monthly as well. Let me check you one thing. Satas, can you hear me?
Yes, ma'am.
What about the calculation? Have you done?
No, ma'am. I'm doing, ma'am.
Is there any issue that you want to discuss?
No, 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 ma'am. I'm doing.
Okay. Thank you, Nitisha. Nitisha, did you get the correct answer for the previous ones?
Yes, ma'am.
Okay, thank you. Thank you, Shakta. Okay, this is the answer for compounded quarterly, and this is for monthly. When it's monthly, 12% I know, and 12 month we have in a year. So the interest rate will be 1%, and the number of periods will be 60 months. So you just need to remember if the number of periods is in month, then, and for example, you got a question that tell you that you need to find out, I mean, you need to find out the future value if the present value or current investment is 500 taka or dollar, and the number of periods is 60 month, and the rate of interest is 12%, okay, yearly, then you need to convert it to month. If the number of periods, that's the important thing you need to understand for solving this question. If the number of periods is given to you in month or daily or semi-annually, and the interest rate given to you is yearly, then always you need to convert the interest rate to whether you get monthly or semi-annually or quarterly, whatever the question, I mean, whatever in the question, you need to convert your interest rate following that pattern. Other than that, your answer will be wrong. Is there any question or confusion until now?
No, ma'am.
Okay, thank you. So like I said, I'll show the loan amortization or loan types in our next class, because we have done mathematics questions so far today. I don't want to bother you again with mathematics question, because the next class will only have theoretical discussion. So I thought that let me put one math question there. Okay, so today I'm not gonna discuss loan amortization, but I want to discuss about your another chapter actually, which is financial market and institution. If you check your book, if I'm not mistaken, it's chapter 3, is it? Could you please check your book and tell me whether it's chapter 3 or not? Financial market and investment banking process. Is it in chapter 3 in your book?
Yes, ma'am. Chapter 3, ma'am.
Okay. Do you have any understanding or any idea what is financial market?
Ma'am, bank.
Okay. Anyone else? Mahathir Mustafi, can you hear me?
Yes, ma'am.
Ma'am, sometimes government or business, those who are doing, they want to invest in somewhere. That's it.
Sorry,
Ma'am, uh,
Nitisha, can you repeat again, dear? Okay, I think we lost Nitisha. Sarah, did you want to say anything?
ma'am, I think financial market is a place where people trade different types of financial securities like bond, then stocks, like these kind of things.
Then what about the bank, Sarah? Do you consider bank as financial market as well?
Ma'am, mm, I think no, banks are not financial markets because it's a place where uh, the two groups need to interact with each other. I don't know, ma'am. I'm a
No
little
problem, sir.
confused.
Thank you for your answer.
Thank you, ma'am.
Jahidul Haq Shikdar, can you hear me?
Assalamu alaikum, ma'am.
Walaikum Assalam, Jahid, how are you?
Yes, ma'am. Fine.
Is everything all right with you?
Yes,
Feeling
ma'am.
sleepy?
No, ma'am.
Feeling dreamy?
No, ma'am.
Okay, thank you, Jahid, for your response. What do you think? What actually financial market? Do you have any idea?
Ma'am, financial market is actually, ma'am, stock, bond, ma'am, cryptocurrency.
Thank you, Jahid. Then, like the same question I asked Sarah, what do you think about bank then? What bank do?
Ma'am, bank is not, ma'am, a financial market, I think.
Okay, thank you, Jahid. Is there anyone who think bank is also a financial market, a part of financial market? If you think, then you can raise your hand. All you are very sleepy and very dreamy. If I ask something, you never respond. But if I called by your name, then you said yes, ma'am, no, ma'am, right? Saiful Alam, can you hear me?
Yes, ma'am.
What do you think? The question I asked, what do you think about that?
Ma'am, I think not. Bank is not related with financial market.
So you think something, right? But you didn't tell me that. So what were you doing? Still sleepy?
No, ma'am.
Okay. Thank you, Saiful. Oh, okay. So whenever we're talking about yes,
I think bank is a part of a financial market because when we need the amount of the capital, we can get there in the bank. And in the main fact, what we do in financial market, we gather our capital, which we can do in the bank. So I think the bank is also a financial market.
thank you, Saad. Thank you so much. And Saad, can you please explain a little bit what do you think about physical market, physical asset market?
Sorry, ma'am, I don't know that.
Saad, if you want to purchase a car, you will go to a showroom, right?
Oh, yes, ma'am.
Is it a physical asset market?
Yes, ma'am. Yes, ma'am. Yes, ma'am.
Thank you, Saad. What you need to do there, you need to think a little bit. because I know that your conceptual understanding is very good and very clear, that you just explained. Yes, bank is also like such said. Bank is also a part of financial market. What actually bank do or financial market do? Because normally what happened, if you want to borrow some money, or if you want to lend some money, where you'll go? You don't know who need money, or you don't know from who you can get money. Normally before the financial market or financial institution, before that period, what happened? uh, have you heard about that if you want to purchase something, maybe for example you have a cow, okay, and you want to buy rice because you need rice, then what happened by that time, that you need to sell the cow to that person who have rice, then you take the rice from him. Have you heard about this system before?
Yes, ma'am. It's a barter system, maybe.
So then what happened? Whatever you have, you need to give them. You are trading with your product. That time, it didn't. We actually that time people don't use the money that we have, because they didn't have that a standard currency. They didn't have that that time. That's why they trade their product. But now what happened, and that time also it's a very difficult. Now what happened, if you don't have financial market or financial institution, if you need money, where you go? Maximum you can ask your parent, you can ask your relative, right? Maybe they also don't have that much amount to give you. Maybe for example you want to purchase a house, okay, you don't for example the house cost you 700,000 something, but you don't have that much money. Where you'll go? If you go to a relative, can they give you that much money? I don't think so. If they have, but still it's a very difficult to give you that much, I mean that big amount of money. So where you'll go? Normally we'll go to the financial market. So bank is also a part of financial market. So where it is a kind of institution where both borrower and saver, borrower means who want fund from others, they have a shortage of fund. And some people actually what they have a savings, they have a fund that they don't need. Actually they have a saving fund, they want to lend that fund, but they don't know who want that fund from them, or the borrower don't know who can lend them. Okay, so the responsibility that financial market do, or we can say financial intermediaries do, that they bring those two together so that they can or there will be a flow of fund between them. So in a flow of fund between the savers and borrowers, that's the responsibility that is played by financial market or intermediaries. Do you understand what they do? And it's also for bank as well, because when you go to bank, the bank don't give their money to you. We sometimes we say that okay, we take loan from that bank, but it's not bank money. Bank took that money from somewhere, then they are giving that to you. Means that maybe some people deposit put their money in bank, right? It is very easy example. You deposit your money bank, in your bank, means you're saving your money in bank. That means bank have that money. Now someone need money, someone wants to get a loan from that bank can give that money to them. So you don't need to know who have the money, and the people who have the excess money, they don't need to know who wants the money. They can go to the financial market or financial intermediaries, and financial intermediaries or market can make the transaction between those two. Do you understand now?
Yes, ma'am.
Ma'am.
So it's actually what financial market do. Financial market basically brought those savers and borrowers together, okay, so that there will be easy flow of fund or transfer of fund between them. That is financial market. And like the question I asked, financial market, yes, bank is also a part of financial market. So don't confuse when someone asks you is bank is a part of financial market. Don't, because whenever we say financial market, you directly go to the capital market, you directly go to the stock bond, you directly go there. But financial market is actually overall, Okay, so whenever say financial market, bank is also a part of financial market, so be careful about that. And like I said, like I asked before, Saad, that what is the difference between physical asset market and financial asset market? Like Saad was saying, physical asset market, if you go, where actually you can go to buy your, I mean, there will be a, like the car example, there will be a showroom that you can go. I mean, real estate, you can see that, you can touch that. Okay, the real estate or maybe car, machinery, all those are your physical asset. And what is the financial asset? Whenever we're talking about financial asset, means the bond, stock, share, whatever we say, mortgage, and others, other claim of real asset, all of that. So do you understand what actually financial market do? Or sometimes we call financial intermediaries as well, so don't be confused. Financial intermediaries, financial market, the same thing. So do you understand now?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
So now, is bank is a part of financial market? Is bank a part of financial market?
Yes, ma'am.
Yes, ma'am.
So I believe if there is any MCQ like that, is bank, I mean, which institution are part of financial market, now you can answer. So don't be confused. Think a little bit harder, and I believe you can give the correct answer. Let me show the slide then. Okay, so like I was discussing before, financial market basically a system that includes individual. Oh, what's happened? Oh. Okay, so it's basically a system that includes individual and institution, instrument, and procedure that bring together borrower and savers. The same thing. Borrower and saver, they don't know personally each other, but if there is an institution or market like this, a standard form of market like this, it's very easy for every person to go there, and they basically play a role as an intermediary. Okay, they take fund from the savers and give it to the borrowers. That's the role of financial market. Okay. So what is the importance of financial market? I already have told you that one is flow of fund, like I explained a little bit, I mean, like what I was explaining before, the flow of fund, right? Whoever the excess money, whoever have the excess money, they can go to the bank. Or for example, someone have excess money, what they can do, they can buy share. They can go to the capital market, they can buy share. And who actually need the money, he's actually selling the share, right? So that's also where you can relate the borrower and saver term there. That means the flow of fund. The flow of fund actually, this role played by financial market. They're taking the money from whoever have the savings and giving it to the borrowers. Okay, when we are discussing flow of fund, if you check your book, there can be direct transfer, indirect transfer through an investment banker, indirect transfer through a financial intermediary. I really appreciate if you go through this term. This is nothing complicated at all. I believe if you read it, you can understand that. Today, I'm not going to explain what is direct transfer, indirect transfer through an investment banker, or indirect transfer through a financial intermediary. This term is not included in your, I mean, this topic is not included in your quiz. So I'm not going to explain it. What I'll do, I'll ask you. In our next class, I'll ask you regarding this. So better that you go through your book as well. Another important role played by financial market, that is market efficiency. There are two parts of market efficiency: economic efficiency and information efficiency. Do you have any idea what actually called uh, market efficiency? I mean, what do you mean by market efficiency? Can you please tell me what do you understand about market efficiency? You are so lazy, You have the book in front of you. I have told you that those information available in your book, but you are so lazy that you will not even open your book and tell me that. Yes, sir, Arafat, Irfat, can you hear me? Arafat, can you hear me? I think Arafat is sleeping. Minhazul Islam Faisal, can you hear me?
Yes, ma'am.
Faisal, can you tell me what do you think about market efficiency?
Uh,
Open your book here and tell me.
okay, ma'am.
To help you out, it's in page 91. So open page number 91 and tell me. Minhazul, do you find that?
Ma'am, actually, ma'am, my book PDF is still loading.
So you didn't open that before when I asked you to solve 4.13?
Yes, ma'am. But ma'am, when you change the, ma'am, in my phone, when I change the app, it again take load.
Okay. Okay, Faisal, no problem. Thank you, dear, for your response. Moli, can you please explain a little bit, dear, what is market efficiency?
Um, Ma'am, I cannot explain because I didn't really understand after reading this.
Can you please read that?
Yes, ma'am, sure. If the financial market did not provide efficient funds transfer, the economy simply could not function as it does now, because Florida Power and Light um, would have difficulty raising needed capital. Miami citizen would pay more for
Okay,
electricity.
let me explain it, Mole. So far, you have it. If the financial market didn't provide efficient fund transfer, the economy simply could not function as it does now. Correct?
Yes, ma'am.
For example, a government institution or a big company, they needed fund. They needed fund. Then previous class, what we discussed so far, if they need fund, what they do normally, they can borrow fund from somewhere or they can issue equity. Correct?
Yes, ma'am.
You remember Molly so far? I'm genuinely asking you. Do you remember that? I mean, our investment decision, financing decision.
Ma'am, are you asking me?
Yes, ma'am.
Okay, so normally what happened, Molly, for you also, dear, please try to understand. If you not, you can tell me anytime, okay? So that I can explain again and again. No problem. But it's very important that you understand. Otherwise, otherwise it will be very difficult for you and for me as well, for you to answer the question and for me to give you less mark. So I don't want to do that, believe me. So if you don't understand anything, you let me know, okay? So, Pranto, what I was saying, if a corporation in our previous classes, we have discussed so far, if they need money, and about their financing decision, they can borrow money from somewhere or they can issue equity. Am I
Or
correct?
bond, ma'am.
Sorry, Pranto.
Ma'am, to borrow a money, they can issue a bond.
Yes.
Okay.
To borrow money, they can issue a bond or a bank. Sorry, they can issue debt securities or bond, or they can borrow money from bank as well. Correct, Pranto?
Yes, ma'am.
So, for example, here one the example is given: Florida Power and Light would have difficulty raising needed fund. For example, it's a government or a very important corporation for a for a country as well. If they need fund, but they cannot get the fund timely, or they cannot, the fund cannot be arranged, or the transfer is not very efficient, then what will happen? It can disrupt a uh, it can disrupt your economy, or it can affect your economy in a very bad way. For
Yes.
example, if it's a for example, if it's USA, or for example it's Bangladesh, and wasa need money. Okay, wasa, right?
Yes,
All of
ma'am.
it. Yes.
Yes, ma'am.
So for example, wasa need money, and it's a very urgent basis. They need money to implement some machinery, something. And if they cannot do it in within the time or timely, then it can interrupt a huge lots of people life. And of course, when that will happen, a chaos will be created for that, and it can impact your whole economy. Am I correct, Pranto?
Yes, ma'am.
So, if the financial market cannot work efficiently, if the market cannot do the transfer of fund, or they cannot arrange the fund, all of that, the responsibility they play, they cannot do it efficiently, then it can disrupt your whole economy. That
Yes.
is the market efficiency. The financial market need to play their role in a very efficient way. Other than that, it can create lots of problem. That's actually here, Molly. That's the thing here saying, if the financial market didn't provide efficient fund transfer, the economy simply could not function as it does now. For example, right now, the financial market is functioning in a very efficient way. But if they cannot continue that, then it will be a huge issue for the whole economy. Molly, is it clear now?
Yes, ma'am, got it. Thank you.
Okay, no problem. So what was the economic efficiency? Like I told you, funds are allocated to their optimal use at the lowest cost in the financial market. For example, that you're transferring, as a financial market, you're transferring fund. That's okay. But if that is not efficient way, means that for fund transferring, you're actually there are lots of related costs regarding funds transferring, right? One is transaction cost as well. That means the cost associated with buying and selling investment. Okay, so if the fund transferring is not efficient, means they're actually incurring more cost of transferring fund. If it's not efficient simply, then also it can hamper the whole economy as well. That is the economic efficiency. Whenever we're talking about financial market efficiency, economic efficiency and information efficiency, those two are a part of market efficiency. And economic efficiency, basically, that the I'm so sorry, just give me one moment, okay? Okay, sorry for that. Sorry for the interruption. If we're talking about economic efficiency, means that the fund are we are thinking that the fund are transferring at the lowest cost. That is the economic efficiency. And another is information efficiency. Information efficiency is another very important concept. I am not sure whether you have heard the term that information asymmetry. Have you heard that before? Any
No,
of
ma'am.
you? Information asymmetry. Okay, what is that basically? Means that one party and another party. What happened normally? Normally, when it's a efficient market and information is available to all the people, then what happened, whatever information you know, I know the same information, right? So there will be information symmetry. So whatever you know, I know the same information. As an investor, maybe for example here Pranta and me, okay, about between Pranta and me, both are investor. So whatever information I know about the market, that particular securities, Pranto have the same information. But what will happen? This is the symmetry situation, okay? Information symmetry. Both parties or different parties have the same information. But what will happen if I have something inside the company? For example, a particular company, they inside that company, maybe I have some people who is very close to me, so they provide some information to me which is a inside information. Normally that information is not open to everyone. They give me that, or that particular person give me that information, so that based on that information, if I if I buy their share, maybe it say that after 1 year, they there will be some opportunity. Because of that, after 1 year their company share price will be very high, something like that. Maybe if we discuss insider information, then we'll discuss all of that. For now, just try to understand, if I got some insider information and Pranto don't have that, that is information asymmetry. That means that both party don't have the same information. Do you understand now what is information asymmetry?
Yes, ma'am.
Okay, so here information efficiency is very important and crucial. What is information efficiency? The prices of investment actually reflect existing information and adjust quickly when new information enters the market. This is the definition I'm telling you from your book. So what does that mean? That whenever the price of an investment change, you can see that, right? You can see the price of a stock or a bond, whatever. What Whenever the price change, immediately the price need to reflect to all. Okay, that is the information asymmetry. Because we know when we are talking about the stock market, within a second there's so many things can happen within a second, or less than that. So whenever a price change of any any product or any stock, any securities, it need to immediately update that and reflect to all the people. That is information efficiency. Other than that, we know within less than a second there's so many things can happen. That's why the market need to be information efficient as well as economic efficient. Do you understand the concept now? The market efficiency, economic efficiency, and information efficiency?
Yes, ma'am.
Yes, ma'am.
Moshfikul Haq Nilim, can you hear me, dear?
Yes, ma'am.
Nilim, what do you think? Do you understand so far?
Ma'am, can you repeat?
Which one, Nilim?
কি জিজ্ঞেস করলেন আমি শুনতে পাই নাই, মাইকটা একটু প্রবলেম করতেছে।
I said, do you understand market efficiency, economic efficiency, information efficiency?
Yes, ma'am. Yes, ma'am. Yes.
No confusion, right?
No.
Okay, thank you.
Okay, ma'am.
Raya Nanziba Kabir, can you hear me, dear? Raya, am I audible to you? Raya, is there any confusion? Thank you, Raya.
Can you repeat market efficiency again?
Market efficiency again.
I am little bit confused about market efficiency and information efficiency.
Okay. Pranto, can you please explain market efficiency to us?
ম্যাম বলতে পারবো, বাট ম্যাম বাংলায় বলতে পারবো।
বলো বাবা, বাংলায় বলো।
ম্যাম আমাদের যে ইকোনমি চালাতে ম্যাম আর বিজনেসের জন্য আমাদের এফিশিয়েন্ট একটা অ্যামাউন্ট লাগে, তো সেই অ্যামাউন্টটাই ম্যাম মার্কেট এফিসিয়েন্সি আর কি ম্যাম।
যে efficient amount লাগে তুমি বলছো, right?
ইয়েস ম্যাম।
So if we cannot find amount in time, then what will happen?
Then ma'am it effect on our economy ma'am.
So market need to be efficient, that they need to take I mean whenever we're talking about market efficiency, if market is not running as efficient, then if someone need the money, it cannot provide if market is not running in an efficient way. Is that you want to say, Pranta?
Yes ma'am.
Idrak, do you understand market efficiency now?
Yes, ma'am.
So tell me, what is market efficiency, Idrak?
If the market doesn't have enough money, so anyone cannot fund, anyone cannot take those money, so the economy will not run so well, so that is called market efficiency.
It's not about only the money there, it's about if the market didn't provide efficient fund transfer, if the system, the financial system, the financial market don't run in an efficient way, then it will be a huge problem. Then we normally call market is running in an inefficient way. So market efficiency, what if someone need money, go to market, they will transfer the fund in an efficient way. Okay, what efficient way? Economic, they will maintain the economic efficiency, mean whenever they transfer the fund, um, the cost will be less for, I mean the transaction cost will be less, the cost associated with buying and selling investment, it will be less. Okay, so if the cost is very high for transferring, suppose you want to for example, you go to, you go to bank, if the transferring cost and you want loan from there, if the transaction cost for taking the loan is very high, then it will difficult for you also to get the loan. And also, if there will be so much cost you need to pay for getting the loan, then how you will get profit from investing that loan amount? So market need to be act in a efficient, market need to act in a efficient way, so that it can actually, whatever amount they are, I mean whatever fund they are transferring, all the fund actually inside the economy, right? Someone taking the fund and someone lending the fund, I mean borrowing the fund and lending the fund, but the fund going where? It's actually still inside the market, inside the economy. So if the fund transferring is not in a very efficient way, then there will be no benefit the economy can get from the fund transfer. Or if it's not in a very time, I mean if they cannot act I mean timely, the financial market, then also it will be a huge problem. Like the information efficiency you said you didn't understand. For example, if there is any changes in the price of a stock, information efficiency that we are saying, within a second, if they, I mean less than a second, the financial market, if you go to capital market, continuously you can see that the price is changing. Each and every time you can say price, because continuously they are beating on something in a capital market. So with, it's less than a second, it can it can happen so many things there in the capital market. So it's very important that whenever a price of any stock or any securities or any asset changes, immediately you update that. Okay, so that is information efficiency, that you'll it's expect that if a market have information efficiency, then if the price of investment change, it will reflect I mean very quickly it will reflect to all the people. You understand it, right?
Yes, ma'am. I understand.
Whoever don't understand, you actually what you need to do, you read that and you will try to make me understand next in our next class. Okay, because my memory is a very my memory is not very long term, it's a short term memory, you can say. Maybe I'll forget within my next class time what is efficiency, market efficiency, economic efficiency, information efficiency, all of that. So it's your responsibility uh, to remind me that. Okay, so what I'll do, I'll ask each and everyone at the very beginning of our next class, what do you think about all of that? And also I'll give, uh, I ask you to read something, direct transfer, indirect transfer, all of that. So please try to read that and try to explain me in the next class. Can you do that?
Okay, ma'am.
Yes, ma'am.
Yes, ma'am.
So let's do your attendance.